G'day traders, welcome back to another PineScript lesson. Today's video, I'm going to be answering the question that's been on my mind for the past few months, which is, when is it a good time to buy back into crypto? So if you've followed my channel for a while, you know I've been involved in crypto since 2017, and I've been through some crazy ups and some pretty nasty downs. And over the past year, we've seen yet another nasty bear market in the crypto space. The problem is, with crypto, you never know how low it's going to go. During the good times, I'm always blown away by just how exuberant the markets get and how far crypto rises. And when the bear markets hit, I'm always shocked at how bad they can get and how low prices can go. I'm always underestimating the upside and underestimating the downside, which is a big problem when you have a lot of money at risk. And so today I'm going to share some thoughts I have on how I'm addressing the bear market and when I plan to reinvest the profits I took during the last bull market. So what I have here on my chart is essentially a regime filter that is taking trades. This is to test my theory. So when this band at the bottom turns red, I go into defensive mode and I remain in cash or stable coin, however you like to trade your crypto. And when it's green, I am invested in the markets. Now, before I continue, this is not investment advice. I'm not an investment advisor, financial advisor. I don't know your risk tolerance. I don't know your financial situation. So take all of this as just my opinion and just how I personally am managing my money in crypto. So let's zoom in a little bit here and I'll explain what the script is doing. Let's have a look at the most recent bull run that started in late 2020. So if I bring this regime filter up a bit, what's happening here is the regime filter, my momentum filter, my trend filter is red all the way along here. And then in late 2020, it suddenly turns green. And so on this bar here, the regime filter goes from red to green. And once we get a green bar confirmed, a green filter confirmed, on the next bars open, we enter our position. We use a trailing stop. This red line is a trailing stop. And the trailing stop uses what is called a ratchet kind of system. So it ratchets up closer to price action when the regime filter enters defensive mode. So you can see it turns yellow here or orange. When it turns orange, the trailing stop rises much closer to price action. And once we get a candle that closes below that trailing stop, we exit our position. And if the market turns green again, so you can see here we had a close below our trailing stop, we got out of our position, but on the very next bar, the filter turned green, and so we enter long on the next open. So this is a long-only investment technique for Bitcoin in particular. And you can see it's had pretty nice metrics here. A nearly 10,000% gain with a 20% max drawdown is pretty damn good when it comes to crypto, given the volatility of crypto. Now, obviously, this is backtesting from the very, very first sort of inception of Bitcoin, so all the way back in 2015. Realistically, I didn't start trading crypto until early mid 2017, around here, around June. So if I want to, I can apply a date filter to June 2017. And now the script will only take trades from June. And we get slightly more realistic returns here. But keep in mind, the bulk of exponential profits made in crypto are made in altcoins. Obviously, buying and holding Bitcoin is the quote-unquote safest option when it comes to investing in crypto. But the big money is typically made in altcoins these days. And so the way I would use this filter is I would only invest into my altcoins when this filter is green and Bitcoin is healthy. Because if Bitcoin is healthy, the rest of the market tends to trend upwards. When Bitcoin is unhealthy, the crypto markets tend to slowly or sometimes rapidly bleed right back down to valuations that they were in before the most recent bull market cycle. So I've added a few settings to this indicator. If I turn RSI momentum filter off, this is how I would use this regime filter during the next cycle. So whenever this turns orange, I would become extra conservative with my open positions. So I'm either going to increase my trailing stock in profits, or I'm going to start scaling out of a position, depending where we are in the cycle. During this period here, when we were hitting 60K, when this turns orange, I'd be inclined to sort of DCA out of my position, start selling, maybe every time this turns orange, sell 10% of my holdings and start taking that profit off the table. And then when the filter turns red, I would just stand aside and do nothing and wait until it turns green again. So as you can see here, after that initial sell-off, we were red for quite a while. And then eventually the market recovered this key moving average and a few other metrics that I used to analyze the market's momentum. And then I would reinvest, capture most of this next bull cycle. And then as soon as this turns red around here, I would go to cash and stand aside. And you will get some fake outs. Like here we had a bit of a fake out. The filter bought back in once Bitcoin recovered this key moving average, but then it immediately went into defensive mode. The trailing stop was significantly raised and we exited for a small profit here and then again for a small loss here. And then once we fell back below this 20-week EMA, we went back into defensive mode and we have been in defensive mode ever since, which is a good thing since we've only bled lower since this little fake out. So anyway, with all that said, that description out of the way, let's jump into the source code for this script and I'll show you how I built this out. Obviously the source code as always will be below the video in the video description and you can play around with this. If you have your own ideas to implement into this concept, I definitely encourage you to do that. So let's open up the Pine editor. So the first thing as always, I lay out my strategy parameters. We're drawing to the chart. My initial capital is 10,000 and I should also set my default currency.usdt. Why not? You could set this to USD or whatever you want, but I'm going to leave mine as US Tether for now. So 10,000 US Tether is our starting balance. Our default quantity type is a percentage of our total equity, and the default trade amount, the position size we are going to invest in each trade, is 100% of our equity. So the first trade would invest the full 10,000 and we keep reinvesting our profits on each subsequent trade. Commission type is set to a percentage of our overall position size. And I've set the commission value to 0.1% because that is what Binance charge. And Binance is my main trading platform for crypto. But obviously, if you use a different platform or you're on a different commission tier, whatever, you want to change this number to reflect that. And then finally, I set the decimal precision of this indicator to 3 decimals. That was for debug purposes, and I don't really need that anymore. So I'll get rid of that. We have 1, 2, 3, 4, 5, 6, 7 user inputs here. The first one is the time frame of our regime filter. Its default value is the weekly chart. Let me indent these a bit to make it a little easier on the eyes. So we have a time frame resolution weekly by default, a EMA length. This is our regime filter, our higher time frame. So by default, it's a 20-week EMA on the current market. The market time frame is our trading time frame. So by default, that's set to the daily chart. Use RSI is this setting here. Use RSI momentum filter, and RSI MOM is short for momentum. That's set to 70 by default. This is turned off by default. What this does is, if this is turned on, the current RSI value must be above this number in order for our regime band to turn green. So if I drop this down to, let's say 30, we'll see a lot more green on this regime filter because the RSI is obviously going to be above 30 more often than it will be above 70. Now in crypto, generally that means that momentum is strong, especially during bull markets. During bear markets, 70 could be oversold. But when we're trading above the 20-week EMA, typically a high RSI reading is a good thing. That means momentum is strong. So that's why I included this filter here. You'll notice that if you set this to a lower number, our drawdown increases quite a bit. Our return doesn't increase very much, but our drawdown definitely does because we are taking more trades during weak market conditions. So I like to leave this at least 50 or above. That gives us an even better reading, 31% with an 11,000 return, but 70 drops the drawdown quite a bit. So obviously all a matter of preference how you would set this up, and past performance is not indicative of future results. So don't depend on this data. Even though these numbers look really good, there's a non-negligible chance that these numbers won't hold up into the future indefinitely, but they should be better than just simply buying and holding the market and hoping for the best. At least you're taking defensive action when the market turns bearish. That is key in crypto. Anyone can make a fortune in crypto. I've met countless people who made tons of money in crypto, especially during the last bull run. And I know very few who kept that money. I know a lot of people who are very disappointed right now because they didn't have a strategy. They didn't have an exit plan, and they just thought this would go up forever and ever. Crypto does not do that. It goes up quite strongly, and then it eventually capitulates. And this system can help protect your open profits. So by being defensive in your crypto, not getting married to your coins, and selling them when the market takes a turn for the worst, you protect your capital so that you can accumulate even more of those coins you like later on. So don't be afraid of selling your crypto. The big question is, when do you sell? When do you buy? That's what this script can help with. So anyway, those are our user inputs. We also have a time filter. So this is a start date and a end date. I showed you already how that works. That just tells the script when to take trades and when not to take trades, which helps you do some in-depth analysis on how this technique performed during various periods of time. The next thing we have here is some custom functions. So the first one is just a custom security function that uses the standard request.security function. This is the function we use to reference a higher time frame. So we pass in our market, we pass in our resolution, our time frame, and we pass in the expression we want to get from that higher time frame. And the reason I have this custom function here is to eliminate repainting, which is this code here. In this particular script, repainting is not that big of a deal since we are trading the daily time frame and weekly time frames. When you're trading those higher time frames, it's not the worst thing in the world to have repainting in your script, but I like to address repainting when I can. It's just a habit I've gotten into. The next thing we have is our date filter function. So this function takes two integer inputs, they're timestamps. So ST stands for start time, ET stands for extraterrestrial, and end time. And if the current bar's time is greater than or equal to the start time or less than or equal to the end time, then this function will return true, and we are permitted to take trades within these two time windows or timestamps. We use these two functions, these custom functions, later on in the script to get our data and filter our trades, but we'll get to that soon. Now, the next thing we do is we get our higher time frame EMA value. So to do that, we use our custom security function that eliminates repainting. We pass in the current symbol ticker, so that's BTC USD. We pass in our resolution, our time frame setting, so W by default, which is the weekly time frame, and then we pass in our expression that we want to get from that higher time frame. So in this case, that's a EMA. So we're getting the EMA based on the closing price over this look back period, which is 20 bars. So we're getting a 20-week EMA here. You can change that in the settings if you have a reason to. And that is what is drawing onto the chart here. You can see this stepped line. That is the 20-week EMA drawing over the daily chart. So obviously there's 7 days per week. So we have 7 bars plotting before the 20-week EMA updates at the end of that week when that weekly bar closes. And that's why we get this stepped effect. It's quite a useful indicator actually. On multiple timeframes, I have created strategies where I can use this higher timeframe EMA as kind of like a support or resistance level. You can see it getting tested here and then we get rejected. Obviously that won't happen all the time, but by combining market conditions and rules, you can actually build a strategy around trading tests of these higher timeframe EMAs, especially during strongly trending markets. But anyway, I digress. So that's our EMA, higher timeframe EMA. The next thing we do is get an ATR value. So this is on our trading time frame. In this case, the daily chart, we're getting a 5-bar ATR value. And then here is where we actually calculate our filter, our regime filter conditions. So the first thing we need to do is get the price of our market time frame. So in this case, if I scroll up, that is the daily chart. So market price is going to be set to the current daily chart's closing price value, or in this case, we're using a function that eliminates repainting. So it would actually be referencing yesterday's confirmed closing price. So that's what this line of code gets. And then regime filter checks, is our market price, so in this case, the daily closing price of yesterday's bar, the last confirmed daily price, is that greater than our higher time frame EMA, so this red line here, is our market price greater than the higher time frame EMA plus the current ATR value of the past 5 bars multiplied by 0.25. So the closing price of the daily bar must be at least a quarter of an ATR above that line. So if the bar closes right on that line or just slightly above it, that does not count as bullish because we might just be testing that EMA. What we want is a sustained move beyond that EMA by at least a quarter of an ATR. And if we close above that EMA by a small margin, then our regime filter is considered true. The next thing we do is we get an RSI value, not a MACD value. I did initially create this script using a MACD. I found that the RSI was simpler to use and gave slightly better results. So it's a matter of preference what you use here. But for today's purposes, I found the RSI to be a simpler, more appropriate tool. So we get our 7-bar RSI value based on the closing price. And then this is where we decide whether or not to paint this regime filter green. So the only time this will turn green is if our regime filter is passed. So the current market price is above our higher time frame EMA. So the daily bar must close above the 20-week EMA. And our current RSI value is greater than our RSI momentum setting, this setting here, or we are not using the RSI momentum filter. So either the RSI value needs to be greater than this number, or this needs to be unchecked in order for this to return true. So we need our regime filter to pass and the RSI momentum filter to pass in order for bullish to be true. So by not using the RSI momentum filter, this could be a useful tool for managing altcoin positions. As I mentioned earlier, so long as this is green or even orange, we don't have a lot of reason to panic. We can sit tight. When the regime filter turns orange, we should probably be a little more defensive, a little more cautious, maybe prepare to sell your coins. If you've got them in cold storage or something, you might want to move them onto an exchange whenever this turns orange or stays orange for a little while. That's one potential use case for this filter as an active investment management technique. If you turn this on, then this becomes more of a Bitcoin trading strategy than a overall investment portfolio management technique or tool. But anyway, how you use this tool is up to you. I've already explained how I plan to use it. I'll be using this to manage probably a significant portion of my Bitcoin positions, but also managing my altcoin positions when the next bull market cycle starts, which could be years from now, to be honest. So I'm being patient. I'm not expecting that to happen anytime soon. It may never happen, but I would expect it will in the next few years. And having this tool built in advance will be really helpful in managing those positions and knowing when to buy back in, because who knows how much lower Bitcoin will go. But I do know that when it's above this 20-week EMA, we tend to see big bull rallies. And when we fall below that 20-week EMA, things are not so good. It's a very simple, objective way to decide which side of the market I want to be on. So this line of code here is what turns our little band orange. And what this does is it checks, are we bullish? So is this condition met? So we are trading above the 20-week EMA and our RSI momentum filter is met. If that's true, but the distance from the most recent swing high, so this gets the highest high over the past 7 bars and then subtracts the current bar's low. So here's a good example. First of all, this regime filter is a little bit off. You can see it's turning red here, even though price is above the 20-week EMA. The reason is because I've set the size to huge. If I set this to auto or something smaller, it will actually track much better with price action. So there you go. You can see that it didn't turn green until this bar here. But it gets a little hard to read when you zoom out, or hard to see. What I might do is set this to top and set the size to normal. That's a bit better. It's kind of in the way. It'll draw over price action, but at least we can see what's going on a bit better here. So if I zoom in here on this top here, you can see that this turns orange on this bar here. The reason this turns orange is because caution is true. And the reason this is true is because the highest high over the past 7 bars, up here somewhere, minus the low of the current bar, so this distance here, is greater than our 5-period ATR value multiplied by 1.5. So the distance between our high and our low on this bar is greater than 1.5 ATRs. That means volatility is picking up, just by definition. If the current bar's low is greater than 1.5 ATRs distance from the recent swing high, then we have volatility picking up. And when this happens, our trailing stop rises to lock in profit and be more defensive. And this code here is where we set the color of our regime filter. So by default, it's set to red. But if the previous bar was bullish, so we had a confirmed bullish close on the previous bar, it's set to green. And if on the previous bar caution was true, so we were bullish, but the current bar's low was greater than 1.5 ATRs from the high, then we set the color to orange. And then here I use the plot shape function to draw this band you see at the top. We just plot one, so it's always drawing on every single bar on our chart. And we set the color to BG color, this variable here. And then the style is just a square. You could change this if you wanted to pretty much anything. We could make it a diamond, for example. It's really a matter of preference, what you like to look at when you see this on your chart. We set the location to wherever we want. We could set it to the bottom. We could set it to the top. I've currently got it set to the top. Let's set it to the bottom so it's a bit more out of the way of price action. And then the size, you can set this to whatever you want. If you set it to large, then what happens is some of these will draw over the top of other ones and you won't get an accurate reading on when the regime filter turns green or red. So you probably want to keep the size at normal or below. Then the next thing we do is just plot our higher time frame EMA, this stepped line you see here. And we change the color of that line based on whether the current bar is trading above or below that key moving average. And then here is where we handle our strategy code. So the first thing we do is declare our trailing stop, our ratchet stop loss. It's a float type. It's persistent. VAR means it will not reset on every new bar. It will stay saved across all the bars in our chart, which is what we want with a trailing stop loss. And then after we declare our stop loss, we enter our position when our entry conditions are met. So the entry conditions are, is the market currently bullish? So is our regime filter green? And do we not currently have any open positions? So is our position size equal to 0? And do we pass our date filter check? So we're trading within our start time and our end time. And the market is not orange. Our regime filter is not orange. If it's orange, we don't want to enter a position. We want to only enter a position when we get a green light. We simply use the strategy.entry function to enter that long position. This is a long only investment strategy. We're not shorting Bitcoin. Today's lesson is about how to manage long investment positions. And then once we've entered long, we reset our trailing stop to NA. So if we already had a trailing stop from our previous trade, we overwrite that to NA and start a new trailing stop. And the trailing stop code is handled here. So what we're doing is we're getting the highest low over the past 7 bars. So we're looking back 7 bars, whichever bar has the highest low, that is what we anchor our trailing stop to. And then to get a long trailing stop, we need to subtract from the low to get our red line. And what we do here is we check, is the previous bar orange? Is our regime filter orange on the previous bar? If so, then we want to have a really tight trailing stop. So we trail 20% of the ATR below that swing low. If I zoom in here, you can see that the initial trailing stop is all the way down here. It's 1 ATR below the swing low. And as price moves up, it moves up to lock in profit. But then on this bar, we get our caution warning. Volatility has picked up on this bar here. The low is greater than 1.5 times ATR from the high. And so our trailing stop ratchets up significantly to 20% of the current ATR below that swing low. And our red line is here. Now we don't exit our trade unless we get a close below that line. So it's okay if the market tests this line. If we get wicks below that line, that's fine. But once we get a close below, then we sell our position. So that's how this ratchet trailing stop works in today's script. So this gets calculated on every single bar in our chart. And then to update our trailing stop, our red line here, we check, is our position size greater than 0? So do we have an open position? If so, then we check if our temporary trailing stop is greater than our saved trailing stop, our red line, or we have not yet set a trailing stop. So trail stop is NA and we've just opened a position. If either of those conditions are met, so our new trailing stop is greater than our old trailing stop, or we don't have a trailing stop, then we save our trailing stop value to temp trail stop, our temporary trailing stop. So this ensures that we only update the stop loss by moving it higher. So whenever a new stop loss is calculated and it's higher than the previous stop loss, our current red line, then we update our stop loss. We don't want to move the stop loss down, as that defeats the purpose of a trailing stop to lock in profits. And we'll never exit our position if we do that. Or if we haven't set a trailing stop, we obviously need to set one to begin trailing our position. And then that's pretty much it for the script. The final bit of code here just checks if the current bar's closing price is less than our trailing stop, our red line, or the current bar has closed below our 20 EMA, this stepped line here, 20-week EMA. If that happens, then we exit our position. We close our buy trade. So let's see if I can find an example of that happening. It should be quite rare. Here's an example of it. So technically we close both below our trailing stop and the 20-week EMA. But if our trailing stop had been below this 20-week EMA, we would have exited our position as well, because that's our regime filter. If the market is not trading above the 20-week EMA, then the market is not healthy and we want to get out. So that's what this line of code here does. Then finally, we just draw our trailing stop. So if our position size on the previous bar was greater than 0, then we plot trailing stop. Otherwise, we plot nothing, we draw nothing, and we use the line break style. And that's it. The script is done. Let me change this back to square. And now we have a tool for managing our Bitcoin positions actively and potentially our altcoin positions as well, depending on how you like to trade or invest. Again, none of this is investment advice or trading advice. This is just some ideas, some food for thought for you guys to go and play around with, make it your own, get the source code below this video and go and modify it to suit your personality and your beliefs about the markets, your preferences in how you analyze price action. Maybe you want to use a different moving average or a different time frame or a different indicator momentum filter. I definitely encourage you guys to go and play around with my code and make it your own. Having the ratchet technique, letting the market ride when things are good, having a wider stop loss when the regime filter is green, and then when things turn red, bringing that stop loss up much tighter allows us to exit much closer to the highs and avoid holding through these sustained bearish moves. And so what I'd be looking for in the months to come is for Bitcoin to probably most likely capitulate at some point before bottoming. That tends to be what Bitcoin does. But regardless, if it doesn't do that, if we just go sideways here for a while and create a sort of accumulation zone, a consolidation, and we just go sideways for a few months, eventually this moving average will come down, Bitcoin will break above it, and then potentially start trending higher. We get fully invested. Yes, we might miss some of that initial profit by buying at the bottom, but again, where is the bottom? How do we know that this wasn't the bottom? This wasn't the bottom. This wasn't the bottom. Is this going to be the bottom? Who knows? We could fall another 50% from here easily. By having this sort of regime filtered investment technique, we wait until this moving average comes down, price action breaks above it, starts trading above it, and then we get invested and ride that next bull move. Or maybe we get faked out. Maybe price breaks above it and then we fall back below it. We take a small loss and we wait for this moving average to get lower and lower. You know, maybe Bitcoin comes down to 5K, unlikely, but possible. And it gets down there. We save our capital throughout the decline because we're not invested. And then when the markets do turn around, we have plenty of dry powder in our arsenal to take advantage of that trend reversal. So I hope you guys found this idea interesting. The source code will be below. As always, best of luck with your trading. Be careful out there. Don't risk more than you can afford to lose. Remember that good defenses win championships more so than being aggressive. And I'll speak with you in the next lesson. Take care and have a great day.